All right, and welcome back for the episode of Carnivore Trades. Today is Tuesday, February 21st, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into the markets today. A lot to cover. So you remember last week when everybody was dunking on Carl Icahn and Ken Carson for that matter for that big put trade, 40 or 30.95 or 39.50, we should call it, which we're basically there now, and right at the 4,000 handle on the SPX, and a lot of crickets out there right now. Anyways, we talked about this. I talked about this over the weekend. I did tweet this a little bit earlier today. I gave it to members last week. But one of the things I want to touch on here is, first of all, you have a failed daily bull flag. And all I was hearing about from everyone is, oh, it's bull flag, bull flag, bull flag. We should go up, and we want to give that. We want to respect that, of course, when you see a pattern like that. But this is a failure now. And one of the things I said to you guys last week, you got to take a look at the cues. The NASDAQ should be leading in a bull market, and it hasn't been leading, but you also have an inside bar here on the monthly. So everybody's trying to tell me that the technicals are great, but they're really not. And one of the things I said over the weekend as well is, look at this run up here. It's very similar to March. Did we build supports here? The answer is no. Did we build supports here? One little micro one there. Did we build supports here? The answer is no. So not a healthy bull run. We've been saying this is a bear market rally. That's what it looks like right now. And market's starting to come back to reality. It's almost as if we just had to get through OPEX week before markets start selling here. Now, the one thing I will say, this is a little bit of a mixed tape here. I don't want to get too crazy on the bear side just yet. But one thing I will say is you do have some relative strength from a few things. Bitcoin, for instance, Bitcoin's still holding up okay, down just 1.55% right now on the futures. So they're hanging in there okay. Tesla has just been an annoying thorn for a lot of bears here, although it is lower today, down 4.5%, which is nothing to sneeze at, but for Tesla, 4.5% is not a lot. So these are kind of the names that are holding up. NVIDIA is down 3% today, still at 50% fib, was such a good resistance area. Really beautiful hit there. And by the way, speaking of not building supports, I mean, come on, so NVIDIA, they report tomorrow. So that will be a mover. Palo Alto reports as well. And then Walmart, obviously, and Home Depot today reported. Home Depot getting trounced down to 296 now. So that is through that little gap window. That's some weakness there. You're below that 200 moving average with volume. So you'll have a level there at 293. And then, of course, the gap fill at 286. Walmart did kind of come back up. The numbers... the headline numbers are okay, but then once you dug into it, it wasn't that good. But Walmart's still holding up here. Again, this is a defensive name, and we're in a defensive environment, so that does make sense. Anyways, I'm going to get sidetracked because I got so much to cover here. So one of the things I want to show you is the kind of setup here going back to, well, we got to go back to 2001. And I've showed this to you guys before. And just give me 1 second, spare. I'm pulling my other screen here. But anyways, so you can see here, let's look at this first, actually. So again, all-time high trend line. One of the things I said to you guys back in, this is back when I was long, by the way. So we were long in late January, and I said, or late December, and I said, look, we can break this trend line and can still be in a bear market. And nobody wants to believe that, but it's true. That can happen. We broke that, and we're starting to flounder here and pull back. Well, if we look at 2001, which I think we're mirroring pretty closely, it's like the same exact thing. So the only difference is this trend line wasn't from an all-time high, but you have 1, 2, 3 hits of it. Pretty good dip, a bottom in September, and then we rallied up. And what do we have here? Does this look a little familiar to you? That big outside candle that immediately got faded with a slight higher high. Let me see if I can pull it up on my other screen here. There it is. So that's in. I'm just going to break this down. So we had a bottom in late September. We moved up. We had a little chop. We pushed up. Failed breakout attempt. Second failed breakout attempt with a slight higher high. Failed bear base. And then a failed bull flag. And then from there, we really started to dump out, as you can see. That was the biggest leg down in the market. And what do we have here on the spiders right now, or actually SPX? 1, 2, 3 hits, bottom in October, not September, but then we went up, chopped around, big outside candle, immediately got faded, slight higher high, failed bear base, breakout. Is this a failed bull flag? It looks like it. So we're now testing the lows here at 4,000. So spider's hitting back to the lows of the day here. It's certainly possible that can play out. Now, again, history doesn't repeat, it rhymes. So it doesn't mean it has to work out exactly like that. But I'm definitely seeing that parallel there with that 2001 bear. So you guys know I've been calling for, this rally to kind of stall out here and eventually roll over. And that's starting to happen today. The only thing that makes me cautious, a couple of things rather. Again, we talked about Tesla, Bitcoin. Really would like to see those rolling over for this to really kind of get going. But, the biggest thing here is the volume. Not the best. So if 65 million shares, if we were, again, and I said this a couple of times last week, I said it over the last couple of weeks, but if the volume was higher, I would already be all in short for a big move down here, which, I do have shorts on the table. We've been accumulating over the last, couple of weeks. But I would really get in if we had a higher volume sell-off here. And that's the only thing that's kind of keeping me somewhat thinking that the market could be buoyant here. Also, just some strange stuff going on. I mean, the market kind of sold off. Putin was running his mouth earlier, but we're not seeing crude's negative, nat gas is negative again. Copper is getting a bid. Gold got a bid, but then came back in. Silver got a nice bid, then came back in a little bit. Platinum, this did get a nice bid. This is actually holding up, beautiful falling wedge there. But seeing kind of a mixed kind of bag right now, even though the market's down pretty sharply, and you are seeing the Qs lead to the downside, which is bearish. We're also seeing the Russell lead to the downside, so Qs and Russell down 3% on the day. Russell is in major trouble here. They should have bounced at 188, and that's not happening. So we're now challenging this weekly bar here, 186.83. We're not that far away. Again, you get a weekly close below that. That is a failed weekly inside bar. And again, the same thing here on the Qs and the spiders. So we're coming into those levels. We're actually below that level on the spiders, below the 50-week moving average, and we're below this green bar low candle. Again, there's still 3 more days in the week. We could reverse that. Nothing to say it can't happen. And again, we've definitely seen, like I said, Bitcoin, Tesla still holding up. Meta is actually having a decent day comparatively, although it did fade pretty nicely off the highs. Who knows? And maybe Nvidia blows out tomorrow and they go back up to 230. This market could still get a little bit of a lift, but this is some damage here, and we've pretty much gone no bid all day long. Somebody's been on the ask, and they've just been killing the bid all day long. We haven't got. I mean, this was like these 2 little pops here, where your pops were your biggest bounce all day long on the spider. So lots of weakness here. Bears are back. The VIX. You're up 14%, but you got to remember that also doesn't include yesterday where the VIX was up as well. So it's a little bit more egregious looking. The actual VIX futures here are only up 7.5, VIXy up 7%, so a higher high there. The VVIX getting a nice bid off the lows there. So again, we'll have to see. Bears can follow through here. You will have support at the 50 MA. We should have support at this basically right where we are, but it doesn't mean we can't dip a little bit lower here tomorrow. I do think we get a bounce, and I think that will be shortable though at this point. So market's under pressure. Bonds, let's flip over to bonds here. ZT, new lows. So again, that took out yesterday's lows. Look at the volume there. It's almost as if everything I've been saying for the last 2 weeks about bonds is exactly what the market is finally figuring out. The 2-year is going lower. That's bad for stocks. Like, there's no way around that. The 10-year also lower, taking out Friday's low. 30-year taking out Friday's low. This can't even get, I thought this would at least get a DCB up to that 128.20 area. Nothing. So still not holding this pivot. There's a chance it could get reversed tomorrow. Look at the volume there. Bonds getting hit. And again, this correlation that we talked about over the weekend, just compare this to, simply, let's just use ZB. Again, the jaw's got to close shut, right? So you have, bonds moving up, that signals a rally. They move down, the Q's got to come back and catch up. Bonds start to sell off, Q's got to catch up. Same thing over and over again. We talked about the bond market peaking in the beginning of the month, and stocks starting to peak here, but showing a bullish pattern. Well, they've got to catch up here. So again, that's really been the case here that we've been making over the last couple of weeks, and it is starting to play out now. Anyways, so we talked about all that. Let's get over to the semis. SMH, we mentioned NVIDIA. We have a failed daily inside bar here unless they bid us up, 4 handles in the next 4 minutes. So that's a failed daily inside bar on the semis. Next support here is going to be around 230. So this is your breakout area. The 50 MA is right in that vicinity. NVIDIA could throw a wrench into everything, so we got to be aware of that and respect that. Because the SMH basically is NVIDIA at this point, just for how significant of a equity that is for the SMH, but and the QQQs. But anyways, low of this green bar is 232.19. So weekly close below that is a failure, and we'll expect lower semi prices. But yeah, those are the levels here we're watching. That is a failed daily inside bar now. IGV, same thing, failed daily inside bar unless they bid us up. Well, they got one handle to bid us up here in 3 minutes. It's possible, but that is now, we'll just call it failed here for the purpose of this video. You'll have some support at the 200. You got a gap fill, the 50 MA. So there's areas, there's bounce levels, but I'd expect lower highs here with that failure. Remember, Palo Alto reports, I don't know how much that'll move the market here, but that is down 1.4% on the day. Okay, Dow Transports. Very close here. So we talked about this area. When we got a close below that, I said, look, it's a little bit weaker here. We're expecting a lower high. We never quite got to 15.5 again, and that's a pretty good rollover. Transport's down 3% in a day. This does have support here, though. I mean, you're basically testing the breakout area. It's just holding, just barely holding. That's really, let's draw this in right now. So 14,650 spot 3. We'll see if they save that by the end of the day here. But either way, we got 2 minutes left, so we'll check it back in a minute. But either way, a negation of that is not a good look here. It does, again, like it does have support. It probably will get a bounce somewhere in this area. You got the 50 MA up in this range here, but again, that's the weekly, that's your weekly breakout there. So transport's under pressure here. Another thing that's under pressure here, jets. That's a triggered daily head and shoulders, which I do have this short, full disclosure. We're in the money pretty nicely on this right now. It's been a bit of a grind, but daily head and shoulders trigger, that target is down to 1775 as long as that doesn't get negated here. Again, could get a bounce at the 50 MA. Here's your past breakout area. But again, did you build supports? No. So after this, there's not much. Really down to about 18 bucks. So jets under pressure here. That is helping the transports come lower. All right, so we mentioned rates earlier, basically getting pummeled here. Let's flip over to home builders, XHB. Outside move, failed bull flag there. That's below this green bar and this green bar here on a closing basis. Again, you'll have some support at 60, just below 66 daily 50 MA. A little bit of chop right there. Again, that's been a pivot point in the past, 60, 64 to be exact. It doesn't have to be exact, but that's where it is. So XHP under pressure here. ITB, Home Depot not helping this one out here, down almost 4%. Again, bounce level, 50 MA, pivot. So they could get a bid here, but this is a pretty good breakdown. I told you guys the last couple of weeks, this is a blow off top here in the ITB, and that looks like that is the case currently. So let's take a look at the transports here. So they just closed it below that green bar. So Dow Transport's now below that level. There's a micro gap there at 48 that just got filled. 14,648 that just got filled. So a lot of failures here across the board. VNQ, which we noted as weak, again, lower lows, lower highs, coming back in. Could it get a bounce at the 50? Sure. But, definitely under pressure, real estate under pressure now. And the big one, let's get onto it. XLF, what I've been saying for weeks. This wedge is tightening. And, nice breakdown. Outside move, 2% for the day here. Take a look at everybody's favorite Credit Suisse. New 52-week, new all-time lows for Credit Suisse, down 3.31% here. JPM down 1.83. Goldman down 2%. Morgan Stanley, really wish it had gotten up to that 102 area, but nice rising wedge break there as well. So that coming under pressure. Broker dealers also lower. Again, we talked about this. A lot of the time with these wedge patterns, you get a pop through it and then you get a fake out. It's still holding the 20 moving average. So, we'll respect it. It's still a strong name. But XBD lower as well. Over to energy, which we touched on a little bit earlier. Crude down 0.5%. Again, not what you'd expect here considering the news today. I still have a little bit of a bear bias on crude here. So we'll see what we get, moving on tomorrow and so on. But again, the level hasn't changed, 82.72. on a weekly close. I want to show you something on nat gas too before we get over to that. We are now, and I've showed you the seasonalities. We typically get a bottom in the 3rd to 4th week of February seasonally, and we are now into contango on nat gas for the first time in a while. It was in backwardation for quite some time, but we're in contango pretty much going out to January. January contract is actually printing green a little bit here. It's spitting up a little bit, but either way, nat gas getting hit here. I did have a mathematical level that got hit today. I don't know if that bounces it right away, but we do have a contract rollover in a few days, so that may get it a bid as we are finally into contango and we are now into the seasonal bottom period. But nat gas, man, what a one-sided trade. This is highly unusual to say the least, but nat gas down another 9% here. XLE down 0.5% here. So again, still holding up though. This has been a tough trade for the short side. It's hanging in there okay. Probably wants that 200 moving average. I would like it a lot better at this trend line. And again, that weekly red bar has held up nicely. We tried to get above it a few weeks ago. We couldn't. And now we're back inside of that. The trend is still up though, so we'll respect it here. Energy stocks are holding up a lot better than energy itself for what that's worth. XOP did get back below this yellow trend line here. So again, weekly inside bar. That can play out here. That does have, that will go lower if we can stay below this area here. But, XOP under pressure, just like everything else. OIH finally breaking down here, but we got to watch the weekly. So if we lose that weekly green bar at 308.31, which we're below right now on a weekly close, that's a failed inside bar. You still have a strong monthly pattern for what that's worth, but again, OIH showing a little bit of weakness here, as did the rest of energy. Anyway, so we already talked about Natty. Let's go over the dollar. Dollar holding up well. Still have a buy signal on this. We called the low perfectly a few weeks ago. Beautiful reversal, bull flag, breaking out of this trend line above the 50 MA. This is holding up well. It needs to do a little bit more consolidation, and then it will work its way up to 106. But dollar holding up well. Gold here. Again, like you said earlier, was down, or it was up earlier, kind of on the Putin comments, which makes a lot of sense to me. And then it kind of rolled over a little bit, but it's still holding this area. I'd still give it the upside bias to probably 1975, maybe 1900, but it's got to prove itself first. But it's holding that area, so we'll respect it right now. GDX, again, didn't take out Friday's low, so sometimes when you get these nice tail candles like that, beautiful support level, by the way, 200 and 100, I love that area. But sometimes you get a retrace when you get those tail candles. So this is still not broken, but you'd think it'd be up a little bit more today. That's all I'm saying. Silver was up 75 basis points. Good volume there. Still can't reclaim that 100 MA, or, it's basically just on that. Again, same thing here, 2250 to 2275, maybe 23 would be your big move up. But there, silver, I do have penciled in to go lower, and then it will be time to buy. Platinum, beautiful level here. We talked about this last week. Falling wedge, fake break, pop. So stalled out at that 200 moving average. But this looks pretty good here for a move back to 975. And then again, your second target would be 1,000 there on the daily time frame. Copper, this wants to get to 425. I think it is a sell right there. So I know this is a pretty decent up move there on copper, but 425, I do have that as a sell level on copper. So I am expecting that to go lower, but there's a nice pop there for copper futures. All right. Lastly, let's get over to Bitcoin. And we'll actually cover it. Okay, there we go. And that is the 30-year yield, which is pushing a lot higher. By the way, we haven't looked at the yield curve in a while. 3-month 10-year starting to come back up here. And 2's 10 is basically at the lows here, so everybody's aware. But the 2-year is above the Fed funds rate right now, just so everyone is aware. But yeah, Bitcoin, it's hanging in there. You'd want to see, like I said over the weekend, bears kind of want to see this to break down. But you know what? Maybe this just getting a lot of retail. We talked about the panic buying that was going on last week in some of these names. You could just be seeing the last of that with Bitcoin and Tesla. They're certainly retail darlings. So again, Bitcoin holding up. Maybe it's a leading indicator. Maybe we do get a nice bounce here. But so far, there's ether there. Nothing wrong with this pattern. So we'll respect it for the time being. You could be putting in, I'm just going to draw this in now. But you could be possibly putting in kind of a rising wedge type look on Ether and kind of Bitcoin. at the very least, you have kind of diverging highs. I wouldn't say this is the best pattern. You do have divergent highs though, so just be aware of that. But crypto's holding up, so we'll respect it for now. All right, yeah. Anyways, let's get back over to the spiders here. So we closed basically right at the lows of the day here. Yeah, 399.13. So I do think they'll get a defend it tomorrow. If we get a gap down tomorrow, they'll probably dip by it. If we gap up, we're probably going to go lower. That's the way I would look at it tomorrow here. But either way, you slice or dice it, I am looking for lower highs in this market, some type of a retrace here. And then I think we continue to roll over moving forward. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.